Today, what you're seeing in the headlines for the market is a reflection of what's happening in the resale market, right? You're seeing affordability really being attacked, and this is not a new thing, right? If you go back to 2020, January, February, March, if you go to 2019, July, August, September, October, it doesn't really matter. Affordability was always an issue, you know, and when detached houses were $1 million as opposed to 1.4 million, it was still by and large out of a lot of people's price ranges. And condominiums were the only saving grace. There was a reason why we were selling so many pre-construction condos. There was a reason why so many people were living mainstream in condominiums. And there was a reason why condominiums took over as the dominant transaction in the GTA. Like that's not very old. That was fairly recent. And the reason is because of affordability, because of location, because of lifestyle. And what you're seeing today in terms of affordability being, sort of shaken at its core is it's not going to change. And the theme of today is I don't care what you think. The market doesn't care what you think. The market's going to move with or without you. You're either going to be an owner or you're going to be a renter. You decide. You decide. Because I don't care what you think. Trev doesn't care what you think. Your competition doesn't care what you think. You have to use the stats. The stats are the only thing that matters. People's behavior is what matters. Your opinion, your buyer's opinion, it doesn't matter. It doesn't matter. Your feelings don't matter, right? And that's the brutality of this market, of real estate, of making money. Those are the cards that you have been dealt. The market is the market, and you cannot change the market no matter what your opinion wants it to be. Unfortunately, it is what it is. Affordability is a big problem, and it's going to continue a big problem, and I'll sort of go into why. So, what happened during COVID, right? Like when we went through COVID, the first couple of months, we saw huge drop-offs. If you chart any of it, April 2020 was the worst single month in our history in terms of transactions, volume sold, the average sales price. We bottomed out real bad. But, not long after, when you started to hit May, June, July, the market really picked up, especially in resale. And it didn't look back. It's not like it was 1 month and then back down and then 1 month and then back down. It was continuous growth right through Q3, Q4. And it left a lot of people behind. And I think a lot of people didn't even realize that this was going on. Like people had no idea where the market was. They couldn't believe the reality of where the market was heading. And then now going into 2021, we are breaking records again. Like we're volume sold, average sales price. We're in a position right now that we've never seen. We actually don't even know how to behave. We don't know how to manage this. Are the victims of a market that is almost so hot that it's mildly scary. And so let's put that into context. Let's go back 5 years. If you look at the 5-year trend, right, over the last 5 years from 16, right, 2016, 2017 were the benchmark. You go back like 50 years, 2016, 2017 will always stand out as the most insane years that you've ever seen. You can see the lulls in the Decembers, right? Because December always slows down over year. But look at what happened sort of after like July 2020. You saw a huge pickup, huge momentum. And then obviously December slows down. But coming into 2021, we really dominated. We really changed the lens, but we didn't just dominate, we broke a record. And so to give you some context, the average month is 8,000 over the last 5 years in terms of transactions, and we're at 13,000, almost 14,000 in April. In fact, in March, we broke the record. We almost doubled our 5-year average. So people are activating. They're waking up. They're wanting to get in the market. They're buying. You may not know what's happening in the market, but you get monthly reports from Trev that tell you exactly what is going on to educate you. So we're trading more than we have ever by a massive margin, sort of in the Q1 of 2021. And so when you look at the sold price, we're selling more product for more money, right? It's the second highest month in terms of average sold price across condos, across low rise, and the record breaker was the month before, the month prior. And again, affordability is a problem. I mean, you look back to July 2020, those are record-breaking months. July, August, September, October, all broke records. We've never seen those numbers before. Then we took a lull in December, and bam, January, February, March, we woke up again. And we've never seen this before. We've never seen this type of price appreciation. And the common theme is, if you think it's expensive now, you have no idea what's going to hit you in the face 6 months to 12 months from now, and I'll explain to you why. And so you look at the average detached, right? It's gone up around 35% in terms of the averages. But if you go back 1 year, it's a big difference. If you go back 1 year, it's you can kind of see the market's jumped in a very short amount of time. Again, average detached is really starting to spike, and this is the second highest average price we've sold. And we're not selling 1 or 2 houses. We're selling thousands of houses in the GTA. So this is what's happening right now is the 905 is what's creating this price bump, right? Like where a house would have been 600,000 is now 800,000. We used to say I can move to Niagara Falls, Brampton, Burlington, Oakville, Mississauga, Markham, Stouffville to find affordability. You can't do that anymore. Those markets are just as expensive, and I think that's what's troubling, is that it doesn't matter where you go. It doesn't matter how far you go. Across the GTA, product is expensive no matter how you slice it. And so when you look at the gap between detached and condos, because what I see now is a pendulum. We were talking about low-rise being so expensive. Condominiums always follow, right? Because it's the most affordable thing. A normal person making $50,000 a year. A normal person doesn't have family to help pay for their home. So they're renting and they're renting and they're renting, and there's nowhere else to go. That is the normal person. You want to be the landlord to that normal person. You don't want to be the renter. You don't want your kids to be in that position. But what I'm seeing now is this big swing. The pendulum is swinging to the condo side because low-rise gotten so expensive, so out of control, so stressful. But the price gap is the 5th highest on record. The last 3 highest were this year. So the reason why you're seeing that price gap go down is because the price of condos are going up, which is what I'm going to show you in the next slide. We broke a record in terms of the average sold price of a condominium in the GTA, not 416, in the GTA. And you're going to see that over and over again because people can't afford a $1 million asset. Some people can. And if those are the only people you're hanging out with, A, good clientele, but B, you're going to lose touch very quickly. And your goal is to cater to the largest demographic, which is the most affordable asset, which is condominium. It's still affordable. There's still a chance to own. So that's what you're seeing. Condominium is on the rise in terms of transaction volume, in terms of sales price. And that's important because you have to understand, where's the market shifting to? That's where it's shifting to. And it's going to continue to rise.